Okay, we're going to use this video to talk about oil, and this is actually going to also double as a really very clear example of analyzing price action at a really detailed level to the point where it's like, you know, when people say things on Twitter like, "Oh, well, this is bullish, this is bearish," and that kind of like, and sometimes it would seem they're missing like a really important detail. Like it's like, well, how could this be bullish if we just made a lower high? Or is that really bearish if we just made a higher low? Like that kind of thing. These things are important. And I wouldn't say that I'm a indicator hater. I think some indicators can be useful, they can be helpful, they can add value. But generally, the best indicator is going to be your eyeballs and you understanding how to read price action because every indicator uses the inputs of open, high, low, close, right? The inputs that these candles are made of. So, enough of that soapbox. This is the chart of oil. This is the CFDs for WTI as opposed to the futures, but the prices are very similar. So we had this huge move, war related for sure, where we got up to 129. And since that move, we had like a sort of plunge over the course of about a week. We dropped down about 27%, really in the course of just well, 1, 2, 3, 4, 5, 6, 7 trading days, right? So more than a calendar week. So this here, I'll delete this part. This was a daily cycle low. So you'll see in my other videos I talk about cycles. As I always say, cycles are just a more specific way of talking about price action and talking about swings. How long has this rally lasted? How long has the pullback lasted? These are all words that are interchangeable with advancing phase, declining phase. Go back and take a look at my video one-on-one on cycles. I'll post it in the description here. That'll give you a lot of this background. But this is a daily cycle low. And we then rebounded out of the daily cycle low. And how do we know it's a daily cycle low? Because this formed a swing low, right? Once we came down, we made this, had this move lower, and this candle marked the low. This was the candle that marked the low point. The high for this candle, which marked the low, was 102.57. And so once we crossed above 102.57 on this candle here, this low became a swing low, meaning it is the lowest point of any candle that preceded it or succeeded it, right? So all of these candles are higher than this one, and all of these candles are higher than this one. And so this forms your swing low once you pass this, and this is your indication that this is potentially a daily cycle low. We then rallied for 7 days. That's what this 7 means, right? So this isn't technically not a rally. This was an inside day, so we didn't make a new low, didn't make a new high. So this was day 1, day 2, day 3, day 4, day 5, day 6, day 7. This was the highest point that we have made since this decline started, right? So we declined from 129 to 93.56, and then we bounced up to 116, and then we started to decline again. That is a lower high, right? When you think about a trend, an uptrend it consists of higher highs and higher lows. A downtrend consists of lower lows and lower highs. So this was your lower high, and so what we would expect is to make a lower low below this low here, right? So you've come down, you've made a low. This is actually a higher low right now. This low is higher than this one. But then you came up here and you've made a lower high. And so now we're looking to see, do we get follow through? And notice, so after that high on day 7, we have been declining ever since. And this high point formed a swing high. So it's the exact opposite as a swing low. The candle that marked the high was this candle here on day 7. I'll get rid of this. Might be too busy here. So this candle that marked a high of 116.61. The low point of that candle is 110.65. So once we cross below that low point of this candle that marks the high, this becomes a swing high, meaning all the candles that came before it are lower and all the candles that come after it are also lower. So it's bearish, meaning after this point, price goes lower. I mean, you can see it visually. I'm zooming in here. Hopefully this is making sense. Like this is clearly going lower after this point. This is clearly going higher after this point. Now the catch is this swing low didn't have much follow through. It stopped on day 7 versus coming up, maybe making a higher low and then continuing. So today is day 19. Yesterday was day 9, or excuse me, today is day 20. Yesterday was day 19, and we did make a new low. So this was a lower low compared to this, although it's just marginal, very slight. So this low is 93.56, and this low is 92.96. So we made a low by about 60 cents, but it is still a low. So we now have our lower high and our marginal lower low, but we're now bouncing. So notice since this candle, every candle has made a lower low. So this candle made a lower low than this, lower low, lower low. I should say almost every candle. This candle actually made a higher high. So this made people maybe think, oh, we might be resuming up, and then nope, lower low, lower low. This one, another fake out. Looked like we made a higher high, but it was a fake out. We almost got. It looked like we were going to get follow through, and then we didn't. Lower low, consolidation, lower low. We're now getting another higher high on the daily. And what I mean by that, to be crystal clear, this high, you can see it. Like hopefully this is clear visually. This high is obviously higher than this high. So that's good. This is a daily chart. And so we've made a new high on the daily chart with this one going above this one. And so what we need to see is follow through. This was an example of follow through. Well, actually, this didn't make a new high. This is an example of follow through. So this candle makes a new high above here. This is follow through because this makes another new high above here. More follow through because this high is higher than this one, which is higher than this one, which is higher than this one, right? And so this could be a big fake out, just like this one and this one. And so we'll have to watch. That's what I suspect it is. And going back to understanding price action, what we would want to watch for is a break above approximately this level, right? Because if we were able to come up here, like here, that would start to break the pattern. We really need to come all the way up here and break this swing high. But after this swing high formed, if you're looking closely, this is technically another swing high, right? Because this is starting to droop after. So like if we could we have to clear this level before we can clear this one. But that's the way to think about it. We need to clear swing highs above, which are essentially resistance zones. And so this looks promising, but this also looked promising. And this looked promising at once. This was a green candle at some point. And so I think we're actually setting up for a move down into the 75 area. And if you look at the longer term chart, I'll show you why I think that. This is a quarterly chart where every candle is 1 quarter. And so you can see the low from last quarter was right around 74. And when we make these larger long-term tops, you tend to get a break below the previous quarter's low. So like you can see, well, this almost looked like a top, and then we made a marginal higher high, and then this was your top, right? Look, we made a low below this candle. This is another example of a major top. We make a low below this candle. Another major top. It took us a while to make a sustained low, but we eventually got it. So I suspect we could find ourselves in the mid 70s, let's say even by the summer before this candle closes. And if you look at the monthly candle, the other reason I say that is we are now 23 months. That's what this means, right? We have been rallying for 23 months since this major low. And this is a 3-year cycle. So call it 36 months. And so if we're already on month 23, that means there's about 13 months left in the cycle. We're going to have some period where we're going lower, right? Like, for instance, this was your declining phase for this. So like this cycle here, so it starts here and it ends here. This was your top, and this whole thing was your declining phase. So your declining phase actually lasted, yeesh, 19 months. Now, it doesn't mean this one has to last 19 months, but it's unlikely we're going to get a declining phase that's like 3 months long, right? So we're probably not going to get the top on month 33. Maybe this isn't the top, but like, look at this candle. I mean, my God, it's going to take a while. Like, we're going to bounce, like, best case scenario, we're going to bounce around in here for months within this range. I think what's more likely is we already broke down below last month's candle, but we've since recovered. I think what's more likely is we get that move down into this area, and then we get a slingshot out to start our next sort of 3-year cycle. And if you're thinking about when that 3-year cycle would end, that would put us at around roughly, call it, sorry, 1 second here. Oops. That gets you to about, call it March or April of 2023. So this time next year, essentially, is when we might expect the 3-year cycle low. Again, that does not tell us with any certainty when the high might come, but that's what we really want to be watching for. And again, I strongly suspect this is the high that we just saw here, just given the look of this candle. I mean, you don't get a much more toppy looking candle than this. I mean, we don't have much of these historically to kind of lean on. In the same way that this was a bottoming candle when oil went below zero, you could see how this would be a topping candle. It almost kind of completes the cycle. We went way stretched to the downside, and then we go way stretched to the upside. So we'll see how this plays out.